The year 2025 is proving to be a watershed moment for a pair of currencies that have long been relegated to the financial sidelines. Suddenly, the world of foreign exchange is buzzing with unexpected news, forcing even the biggest, most seasoned players in the Forex arena to shift their focus. Imagine a scenario where the money once casually dismissed or even mocked is now a serious point of discussion on global trading screens. This isn't just a fleeting rumor or an exaggerated claim without substance. It's a verifiable financial reality unfolding right now. The Iraqi Dinar IQD and the Vietnamese Dong VND have unexpectedly stepped into a bright international spotlight, with their live forex rates being openly confirmed and tracked across major worldwide markets. This dramatic change signifies more than just a passing interest. Today, we're dissecting the core implications of this development, examining precisely why these two specific currencies, the IQD and the VND, are now legitimate assets being closely monitored by reputable platforms. Furthermore, we'll explore the crucial questions being posed by traders and investors globally. Many are asking if this represents the foundational start of a truly historic shift in the global financial landscape. By the end of this detailed analysis, you will understand why a significant number of market watchers believe the narrative of these two currencies is far from reaching its conclusion. Let's begin our deep dive with the Iraqi Dinar, a currency that has spent nearly 2 decades in the economic shadows. Since the instability and conflict of the early 2000s, the dinar has been largely dormant on the international stage. For many years, active trading of the IQD outside of Iraq was virtually non-existent, and most international banks flatly refused to handle the currency. Investors who maintained a long-term faith in the dinar were often regarded as nothing more than wishful dreamers. However, as we move through 2025, the picture is undeniably starting to change. Current live market data indicates that the dinar is trading at a rate of approximately 1,310 dinars to $1 US. What's revolutionary about this figure is not the rate itself, but the context in which it appears. For the first time in an extensive period, these exchange rates are not merely static, printed figures on a government document. They are being displayed in real time on officially recognized global Forex platforms. This simple fact is a powerful signal, marking a tangible willingness by global markets to acknowledge and engage with Iraq's financial system. While the dinar's value may still be relatively weak, its move from obscurity onto the main stage of international trading is a significant milestone. This monumental shift in visibility and accessibility carries an importance that is perhaps underestimated by general observers. It represents a subtle yet profound change in the world's perception of Iraq's financial viability. Following the dinar, we now turn our attention to the Vietnamese Dong, a currency that, for entirely different reasons, has also been consistently undervalued in the eyes of many international investors. The Dong is currently trading at roughly 24,000 VND to $1 US, a seemingly substantial number that can appear daunting at first glance. However, Vietnam's economic foundation is structurally distinct from Iraq's. Vietnam has demonstrated a consistent and impressive track record of robust economic growth over a period of many years. The nation has successfully transformed itself into a globally important manufacturing and supply chain hub, increasingly attracting significant foreign investment from companies seeking alternatives to production in China. Sectors ranging from high-tech electronics and textiles to agriculture continue to act as powerful engines for Vietnam's export-driven economy. As a result, professional forex traders are now tracking the Dong with unparalleled intensity, with a prevailing sentiment that the currency is positioned for a gradual yet steady climb in value. While the Dong may not experience dramatic overnight leaps in its exchange rate, the fact that its trading volume and activity are steadily increasing worldwide is yet another indicator. It suggests that currencies once easily dismissed are now commanding serious global attention in 2025. This leads us to one of the most intriguing and frequently discussed aspects of the Iraqi dinar, the persistent speculation concerning Iraq's potential removal of 3 zeros from its currency. This technical process is formally known as redenomination. Redenomination is a common practice that many nations have undertaken throughout history, including Turkey in 2005. When they eliminated 6 zeros from the Turkish lira, it is crucial to understand that redenomination does not inherently increase a currency's intrinsic value. Its primary purpose is to simplify transactions and make the currency more manageable for everyday use. For example, instead of a citizen paying 1,310 dinars for a dollar, they would theoretically pay 1.31 dinars. While straightforward on the surface, this concept is often a source of misunderstanding among lay observers. It is vital to distinguish redenomination from revaluation. Revaluation is the process where a currency genuinely gains substantial value, a change driven by demonstrably stronger national economic fundamentals and international confidence. For the Iraqi dinar to truly appreciate to parity with or above the US dollar, Iraq would need to achieve massive, sustained political stability, significantly boost its oil production capacity, drive comprehensive infrastructure growth, and cultivate deep international trust in its financial systems. Without these fundamental pillars firmly in place, redenomination would simply result in new banknotes with different numbers, without altering the underlying strength of the nation's money. The central question that many serious investors continually pose is whether Iraq can realistically execute a genuine revaluation of its currency. On paper, the nation certainly possesses the necessary raw material wealth to do so. Iraq is home to some of the world's largest proven oil reserves, estimated to be around 145 billion barrels, and oil constitutes approximately 90% of Iraq's total government revenue. This inherent wealth provides Iraq with immense long-term economic potential. However, potential alone is insufficient to drive currency strength. Substantial hurdles remain in the form of deep political divisions, pervasive corruption, and severe, ongoing infrastructure deficiencies. Until these systemic issues are comprehensively and successfully addressed, the expectation of a sudden overnight surge in the dinar's value to $1 or more remains financially unrealistic. Nevertheless, the fact that major Forex markets are now dedicating live, visible attention to Iraq's currency is, in itself, a historic milestone. It signifies the global community's willingness to, at the very least, observe and measure Iraq's financial trajectory, rather than simply dismissing it entirely as was common practice in the past. Vietnam, in contrast to Iraq, is not grappling with the same intense political and security-related turmoil. Instead, Vietnam's primary economic challenge is successfully sustaining the incredible momentum of its rapidly expanding economy. The Vietnamese Dong has long been considered fundamentally undervalued by numerous economic models. Yet the country's impressive annual GDP growth, often hovering around the 6% mark, strongly suggests that a long-term currency appreciation is entirely plausible. The accelerating trend of companies relocating their manufacturing facilities from China to Vietnam is providing a substantial boost to the manufacturing sector. Further solidifying this outlook, the professional Forex trading community has clearly taken notice of these favorable macroeconomic trends, and the live trading rates now clearly reflect that investors are no longer ignoring the potential of the Dong, while any appreciation is expected to be gradual rather than explosive. Vietnam is effectively building a strong reputation as a stable, reliably growing economic powerhouse within the Asian region. This makes the Dong one of the most compelling currencies for serious observation in the years ahead, particularly as global trade dynamics and supply chains continue their fundamental shift throughout 2025 and beyond. A look back at financial history repeatedly demonstrates that major currency shifts are rarely sudden events. Countries like Turkey, Brazil, Germany, and South Korea have all navigated significant currency adjustments, and in every single case, these changes were inextricably linked to years of comprehensive long-term reforms and national rebuilding efforts. Kuwait is frequently cited as a post-war example, as the Kuwaiti dinar returned to its pre-war strength following the Gulf War, eventually becoming one of the world's highest-valued currencies. However, Kuwait's situation was economically unique, possessing enormous wealth coupled with a vastly smaller population. Iraq, with a population exceeding 40 million people, requires far more extensive and deeper economic and structural reforms before its currency can realistically attain a comparable level of strength. This fundamental distinction is why professional traders often caution newer investors against conflating unique historical examples with Iraq's very specific, complex current reality. Every nation's economic path is different. While Iraq's potential is immense due to its oil wealth, it faces significantly heavier burdens and deeper institutional challenges before reaching the level of currency power seen in small, wealthy oil nations. So, what precisely are global traders focusing on in 2025? For Iraq, attention is concentrated on a combination of critical factors: the status of its foreign currency reserves, consistency in oil output, the long-term stability of the government, and the overall volume of foreign direct investment. These hard indicators are what tell the true story of whether the dinar can fundamentally strengthen. For Vietnam, traders meticulously track its GDP growth rate, detailed export data, the rate of manufacturing expansion, and the continuous inflow of foreign direct investment. They also maintain a close watch on Vietnam's delicate and crucial trade relationship with both the United States and China, as these two economic giants exert the most significant influence over Vietnam's future trade prospects. The increasing presence of both the IQD and VND on live Forex trading platforms now grants global investors an unprecedented, transparent window into these financial movements. This visibility is transformative, ensuring both currencies are now a legitimate and unavoidable part of the worldwide financial conversation, a status they certainly did not enjoy even a few short years ago. However, it is essential to discuss the inherent risks involved because currency speculation, especially in developing markets, is never a simple venture. Many new investors mistakenly equate buying a foreign currency with purchasing corporate stocks. The two asset classes, however, behave very differently. A company's stock can potentially soar quickly on the back of strong corporate performance, but a currency's value is intrinsically tied to the overall long-term health and stability of an entire national economy. For a currency to even double its value, the entire underlying economy must undergo a major, sustained, and structural transformation. This is why professional traders often characterize betting one's entire savings on a single, speculative currency as inherently dangerous. Political surprises, a sudden eruption of regional conflicts, unpredictable natural disasters, or unexpected changes in central bank monetary policies all possess the power to wipe out currency value virtually overnight. With the IQD and VND now enjoying this new, enhanced visibility on global Forex markets, the temptation for retail speculation is undeniably strong. But the principle of caution remains the single most important watchword for all market participants. The Forex market itself is a leviathan, with an estimated $6.6 trillion traded every single day across the globe. This makes Forex the largest and most liquid financial market on Earth, easily eclipsing the combined size of the global stocks and bonds markets. This vast space is overwhelmingly dominated by professional institutional traders, who employ highly advanced tools and complex strategies that are generally inaccessible to individual investors. When we encounter highly publicized stories of individuals betting heavily on the IQD or VND, with the expectation of achieving overnight riches, it is crucial to remember a simple fact. Even highly experienced currency experts with decades of professional trading struggle to predict short-term currency movements with reliable accuracy. Central banks possess the authority to alter their monetary policy without public warning, and major global events can send shockwaves through markets in a matter of hours. This profound unpredictability is precisely why financial advisors consistently recommend that every day investors prioritize diversification instead of concentrating all their investment hope into one or two highly speculative currencies. Despite these inherent risks, we cannot ignore the undeniable fact that 2025 marks a pivotal turning point for both the Iraqi Dinar and the Vietnamese Dong. For the first time in many years, they are not being summarily dismissed by the global financial community. Major, reputable Forex liquidity providers are officially listing them with real-time data, and this public listing signals a crucial level of legitimacy. When any currency achieves this level of global visibility, it automatically opens new doors for legitimate trade, direct investment, and inevitably speculation. Both Iraq and Vietnam now find themselves under the intense scrutiny of the global financial magnifying glass, and what unfolds next will depend entirely on the performance of their respective governments, their actual economic output, and their ability to successfully attract and retain foreign investors. This is not yet a revolution in currency markets, but it may very well be the critical first step toward one. For Iraq to successfully navigate the path toward a fundamentally stronger dinar, a series of complex factors must align seamlessly. Political stability must transition from being a mere government promise to a sustainable, functioning reality. The country's vast and crumbling infrastructure must be comprehensively rebuilt, spanning everything from power plants and main roads to public schools. Crucially, oil production must be expanded and managed with rigorous efficiency, ensuring that the immense revenue generated is strategically reinvested into national development rather than lost to endemic corruption. The Iraqi banking system urgently needs modernization to facilitate smoother domestic and international transactions, creating a safer environment for both citizens and investors. Foreign investment must be actively welcomed and incentivized, not stifled by excessive bureaucratic red tape. If Iraq can successfully execute these monumental, long-term steps, then the long-held dream of a stronger dinar could transition from speculation into a tangible reality. However, achieving all of this is an extensive, multi-year journey, not an overnight miracle. Vietnam's pathway to a significantly stronger dong, while structurally different, is also fundamentally a long-term project. For the dong to appreciate significantly, Vietnam must continue to aggressively expand its manufacturing base, strategically invest in higher-value industries like technology, and substantially strengthen its education system to produce a more highly skilled workforce. Essential infrastructure, including international ports, modern airports, and national highways, must be developed at a pace that keeps up with the country's blistering economic growth. Furthermore, the political stability that has characterized Vietnam must be meticulously preserved, as it is a crucial magnet for attracting and retaining global investment. If Vietnam successfully maintains these positive economic trends, the dong is likely to experience gradual appreciation over the coming years. This expected trajectory would not be the kind of sudden spike that excites speculators, but rather a steady, sustainable climb in value, solidly backed by genuine and verifiable economic progress. History teaches us that major, sustainable currency changes consistently follow prolonged periods of national war recovery or rapid, fundamental economic restructuring. The Japanese yen grew exponentially stronger as Japan successfully transformed into a post-war economic titan. The South Korean won appreciated as its domestic industries became dominant global leaders in various sectors. Germany systematically rebuilt after World War II to create one of the most powerful and stable economies in the world. Each of these transformative stories took many years, even several decades, to fully materialize. This historical perspective is absolutely essential for anyone closely watching the unfolding financial narratives of Iraq and Vietnam today. Yes, both nations possess undeniable economic potential, but patience, backed by a realistic understanding of the necessary timeframes, is the true test for any long-term investor. Overnight success stories in the highly complex world of currencies are exceedingly rare, and when they do occur, they are nearly always linked to extraordinary, often unpredictable, geopolitical or economic events. The immediate reality of Iraq's economy today is that its vast oil reserves represent both its core strength and its major weakness. Oil accounts for nearly 90% of all government revenue, making the entire economy exceptionally vulnerable to the volatility of global oil prices. When crude oil prices surge, Iraq's financial situation benefits significantly. Conversely, when prices drop, the entire national budget suffers a major setback. Until Iraq successfully and significantly diversifies its national economy away from its near-total reliance on oil, the dinar's value will always be inextricably linked to the fluctuations of the global oil markets. Vietnam's economy, in stark contrast, is much more balanced, with manufacturing, agriculture, and services all contributing substantial, diverse streams to its overall growth. This inherent economic diversity gives Vietnam a clear advantage and largely explains why the dong has enjoyed far greater overall stability when compared directly to the volatility of the Iraqi dinar. So, what are professional Forex traders actually doing with these two currencies right now in the present day? The vast majority are not placing large bets on a sudden, massive revaluation event. Instead, their focus is tightly fixed on short-term price movements and technical analysis. They meticulously analyze economic reports, central bank policy announcements, and ongoing geopolitical developments. Their primary goal is to seek small but consistent profits, rather than chasing the unlikely dream of massive, rapid gains. Some larger hedge funds and institutional players do hold strategic positions for long-term trend following, but they always spread their risk across a wide basket of currencies instead of concentrating all their capital on just one or two. This professional, risk-managed approach clearly illustrates Why retail investors should always tread with extreme caution when chasing the dream of quick profits from the IQD or VND. So, what is the most realistic outlook for Iraq? Gradual, verifiable economic improvements could slowly and sustainably push the dinar's value upward over an extended period. However, any expectation of sudden, massive gains is unrealistic without the implementation of sweeping, deep-rooted reforms. For Vietnam, the steady, reliable growth in manufacturing and exports is likely to slowly but surely support a stronger dong over time. Again, the expected outcome is long-term sustainable appreciation, not the kind of overnight success that fuels speculative excitement. Both currencies are now undeniably in the global spotlight due to this new, increased trading visibility, and that alone represents a massive, non-trivial shift. However, for individual investors hoping for extraordinary outsized returns, the core message remains unchanged. Extraordinary currency change requires an equivalent level of extraordinary and sustained national progress, and that progress, by its very nature, takes considerable time. In conclusion, the year 2025 marks a definite and undeniable moment. The Iraqi Dinar and the Vietnamese Dong have formally stepped onto the global financial stage in a way that has simply not been seen before. Their official public presence on major Forex trading platforms signals a turning point in how these currencies are internationally perceived and treated, while the exact future trajectory of their values remains inherently uncertain and subject to many variables. One fact is now crystal clear: they can no longer be completely dismissed or ignored by the financial world. The world's financial community is now closely watching Iraq and Vietnam, and professional traders everywhere are carefully measuring their next economic and political moves. As is the case with all currency investing, a substantial risk of loss exists, and no individual should ever risk more capital than they can comfortably afford to lose. But as these two currencies continue to attract increasing global attention, the story of their economic evolution is certainly far from finished. The crucial next chapters will be written by their respective economic performance, political stability, and their ability to cultivate and maintain international financial trust.